According to NUANU's own reports, the area received more than 800,000 visitors during 2025 alone. Yes, the company has experienced delays. Evaluating rental profitability inside NUANU is not an easy task. Some people may argue that tourists come to Bali specifically for a traditional Balinese aesthetic. Many investors underestimate when analyze Bali real estate market. Project says a lot about the reputation the company has already built inside the market. Hey everyone, Anton here. For 3 years, I was one of the top performing brokers working with some of the largest developers in Bali. I sold projects at international real estate conferences around the world and worked directly with major investment-focused developments on the island. But today, I'm on the other side of the deal. Now I analyze the Bali property market as an independent expert, looking not just at marketing promises, but at actual numbers, risk, legal structure, construction quality, and long-term investment potential. And honestly, over the last year, Bali hasn't given us many truly strong project launches. Yes, there were plenty of new developments, beautiful renders, aggressive marketing campaigns, developers promising 15 to 20% returns, and the next Dubai. But projects where all key factors actually come together, solid construction, strong legal structure, reasonable pricing, good leasehold terms, and real investment potential, those have been surprisingly rare. And then, at the beginning of this year, one project started getting a lot of attention from brokers, investors, and developers across the island. A project that many people in the Bali market believe could become one of the strongest investment opportunities of 2026. So I decided to break it down in detail and understand whether the reputation is actually justified. Today we are reviewing the new project by Unit Development, Black Sands Oasis. No paid promotion, no sugarcoating, just number, risk analysis, and conclusions. Let's begin. As I always say in my reviews, on Bali, location is at least 50% on the investment result. Because infrastructure density around the project directly affects rental demand, occupancy, liquidity, and ultimately your ROI. Black Sands Oasis is located inside NUANU, or as many people now call it, the city of the future. And that is not just marketing language. A few years ago, this area was considered a remote alternative to Canggu, far away, inconvenient, and not particularly interesting for tourists or investors. Today, it has become one of the most talked about destinations on the island. According to NUANU's own reports, the area received more than 800,000 visitors during 2025 alone. For those unfamiliar with the project, NUANU is Indonesia's first private commercial city. The founder is entrepreneur and investor Sergey Salonin, who reportedly invested around $250 million into the infrastructure and development of the area. And unlike many future city concepts we see in Southeast Asia, NUANU already has functioning infrastructure. Today, the territory already includes restaurant and beach clubs, premium wellness and spa complexes, concert venues, large green park areas, galleries and museums, educational facilities, and one of the strongest international schools in Bali. Over the next 2 years, NUANU also plans to open 2 shopping malls and what is expected to become the largest fitness cluster on the island. One of those commercial centers is expected to launch later this year. Now, returning specifically to Black Sands Oasis. The project is located in the central part of NUANU, approximately 700 meters from the ocean and within walking distance of the future Acadia shopping center. And this is where we need to discuss something many investors underestimate when analyze Bali real estate market. NUANU occupies only around 44 hectares of land. And according to the master plan, only about 30% of the territory can actually be developed. The rest must remain green space. This creates something extremely important: limited supply. There will only be a relatively small number of residential projects located within walking distance of all major infrastructure. And in the long term, the scarcity can become one of the strongest competitive advantages for projects entering NUANU today. Because once the ecosystem is fully developed, demand may continue growing while supply inside the area remains heavily constrained. And objectively speaking, Black Sands Oasis is positioned to benefit from that dynamic. But now let's talk about the downside, because there definitely is one. The main issue with NUANU today is transportation accessibility. The drive from central Canggu takes around 35 to 40 minutes by scooter and often up to an hour by car during traffic hours. And realistically, there is currently only one major road leading into the area, a two-lane road that is already becoming overloaded. So now we have paradoxical situation. NUANU is building a massive lifestyle and entertainment ecosystem capable of attracting huge visitor traffic, but the transport infrastructure still feels like a bottleneck. And some tourists and long-term residents simply are not willing to spend that much time commuting. Now NUANU's management has publicly discussed plans for a bypass road and improved infrastructure connections. And if that road eventually becomes reality, accessibility could improve dramatically. But the key word here is if. And more importantly, when. Because today there is still no fully clear timeline, so investors need to stay realistic. The upside potential here is enormous, but transportation accessibility will likely remain the biggest weakness of the location over the next few years. Now let's talk about the developer behind the project. And honestly, this is one of the reasons why Sands Oasis attracted so much attention on the Bali market. Because Unit belongs to a relatively small group of developers on the island that not only launch attractive concepts with a strong marketing, but actually finish their projects. And in Bali today, that alone already matters a lot. The company was founded by two partners, Steven Fedas, co-owner and CEO of the company, and Anna Orlova, co-owner responsible for architecture and product design. At the moment, the company has already completed 2 projects and currently has 3 more under active construction. The first project was Unit Space Village, and to be fair, the project received quite a bit of criticism from the Bali real estate community. There were concerns about construction timelines, interior finishing, quality, and overall execution. But it's important to understand the positioning of the development. It was essentially an economy segment project. And objectively speaking, for the price buyers paid, the delivered product was still relatively competitive for the Bali market. More importantly, today the project demonstrates strong occupancy rates and stable rental demand. So despite the criticism, the project itself is functioning successfully from an operational perspective. Now, if we move to the company's second project, this is where Unit clearly stepped up to a completely different level. Yes, there were still delays, and we'll talk honestly about that, because delays in Bali are a systematic issue across the market. But at the same time, most people who visited the project noticed a significant improvement in construction quality, finishing materials, architecture, and overall execution. Some of my own clients who visited the property told me that in terms of price to quality ratio, it was one of the strongest projects they had seen on the island. And honestly, I was personally surprised by the level of finishing quality Unit managed to deliver, considering the relatively low entry price at launch. But what I find even more interesting is how the company evolved internally after the first project. Instead of continuing to rely heavily on external constructors, Unit started building its own production ecosystem. The company launched its own metal structure manufacturing facility using expensive New Zealand equipment, its own furniture production line, and its own internal construction structure. And this is actually a very important signal for investors, because this level of vertical integration usually indicates a long-term strategy. It allows the developer to control quality more effectively, reduce dependency on substructures, improve margins, and minimize some operational risk during construction. At the moment, Unit is simultaneously developing 3 projects. One of the complexes, which will become the final part of Unit Village ecosystem, is expected to be completed this year. Another project, 5 Elements in a Boot, is being developed as a private custom project for entrepreneur Mikhail Dashkiyev. And honestly, the fact that high-profile entrepreneur trusted Unit with a private development project says a lot about the reputation the company has already built inside the market. Now, Sands Oasis represents something very important for Unit. This is effectively the company's first large-scale entry into the business and upper business segment. And that creates both opportunity and risks, because scaling from economy or comfort class projects into a more premium segment is never easy, especially in Bali. So if we summarize the developer section objectively, Unit is clearly one of the more reliable developers currently operating in Bali. Yes, the company has experienced delays, but unlike many developers on the island, they actually complete projects and continue evolving their product quality. At the same time, investors should remain realistic. Construction delays are still a systematic factors in Bali real estate, and Unit still needs to prove that it can scale rapidly without sacrificing timelines or execution quality. So, from an investor perspective, the conclusion is fairly simple. The upside potential is strong, but timelines should still be approached conservatively. Now let's move to what I personally consider one of the weakest parts of the project, the management company. At the moment, Unit plans to manage Sands Oasis through its own internal management company, while also cooperating with NUANU's infrastructure management team for public areas in relatively limited format. And this is where things become more complicated. To be fair, Unit already has some operational experience. Their management company currently operates Unit Space Village and has already started managing the company's second project as well. Later this year, they are also expected to begin operating the third project, effectively completing their own internal residential ecosystem. So the company is clearly gaining operational experience. But the key issue here is positioning. The first Unit project was essentially economy segment. The second and third project moved closer towards comfort plus level developments. But Sands Oasis is a completely different category. This project is positioned as a business class product with premium ambitions, and that automatically creates a completely different level of expectation from guests, because Sands Oasis is not being marketed as just another residential complex. It's being presented as a conceptual hospitality product with a strong Eastern and Moroccan-inspired atmosphere. The entire concept revolves around experience, atmosphere, sound design, sense, lighting, hospitality, emotional immersions, and lifestyle branding. And managing this type of project is fundamentally different from traditional property management. This is no longer just about cleaning villas and handling check-ins. This is guest experience management, and usually this level of hospitality can only be delivered by operators with strong experience in boutique hotels, luxury hospitality, or highly conceptual lifestyle project. Without that expertise, there is always a risk that a strong concept remains mostly marketing rather than becoming a real guest experience. And personally, I'm not fully convinced that Unit's current operational structure is yet ready to deliver the exact level of service implied by the project positioning, at least not today. At the same time, there is still roughly 2 years before the project is expected to become operational, and that is actually a meaningful amount of time. The company still has time to strengthen management, bring in outside expertise, hire hospitality professionals, and build an internal different service culture around the project. But realistically, doing that without experienced international hospitality specialists would be very difficult. So personally, I really hope the company uses these 2 years wisely and significantly upgrade the operational side of the business before launch. Because ultimately, the biggest competitive advantage of Sands Oasis is not just the location, it is the concept itself. And if that concept is executed properly operationally, the project could become genuinely unique within the Bali market. Now let's talk about what is probably the most interesting part of the entire project, the concept itself. Because honestly, Sands Oasis doesn't look like a typical Bali development. And in a market where every second project tries to imitate the same tropical Balinese aesthetic, that alone already creates a differentiation. According to Steven Fadas, the inspiration behind the project came primarily from Moroccan architecture. More specifically, the Yves Saint Laurent Museum in Marrakesh, Middle Eastern architecture, and even visual atmosphere of Denis Villeneuve's movie Dune. And you can genuinely see those references through the project. The Eastern influence appears both in architecture itself and in public spaces. For example, one of my favorite design elements is the large obelisk-style art object at the entrance of the complex. Another strong element is a central pool area designed as a private enclosed courtyard, similar to what you would see in traditional Eastern palaces or riads. That same aesthetic continues inside the villas and apartments. Warm textures, sand-colored materials, soft lighting, minimalistic but atmospheric interiors, and honestly, from a branding perspective, this is a very smart move. Because yes, some people may argue that tourists come to Bali specifically for traditional Balinese aesthetic, but there is the reality. Traditional Bali-style architecture already exists in hundreds of projects across the island. And that creates a different problem: oversaturation. Meanwhile, projects with a truly recognizable visual identity are still extremely rare. And in the long term, uniqueness itself becomes a competitive advantage, especially in hospitality-driven real estate. Because tourists increasingly choose projects not only based on location or price, but based on experience and emotional identity. And Black Sands Oasis definitely has a stronger identity than most projects currently launching in Bali. Now, whether people personally like the Moroccan-inspired design or not is subjective, but from an investment perspective, standing out is often more important than trying to appeal to absolutely everyone. And personally, I think this concept has a good chance of aging well over time. Now let's move to the actual unit formats inside the project. There are quite a few different layouts and products categories available, but I will focus on the 4 formats that I believe are the most relevant for investors. 1-bedroom apartments. Total units numbered 20. Size 31 square meters. Starting price approximately 109,000 USD. Price per square meter around $3,380 per square meter. The apartment size itself is relatively standard for Bali hospital real estate. At the same time, there are a few important advantages worth mentioning. First of all, the apartments feature relatively high ceiling, which is usually associated with more premium developments on the island. Second, every apartment includes its own kitchen area. And this is actually important because it expands the potential target audience. The unit can work not only for short-term tourists, but also for digital nomads, medium-term renters, and long-stay guests. Now, generally speaking, I still consider apartments to be one of the weaker investment formats in Bali overall, especially when compared to villas. But NUANU is one of the few locations where apartments could potentially perform significantly better than island average, mainly because supply inside NUANU is heavily limited. Tourism demand continues growing, and compact units may still achieve strong occupancy due to accessibility to the ecosystem itself. So while apartments remain the risks format for resale perspective inside NUANU, they make considerably more sense than in many other parts of Bali. 1-bedroom villas. Total units 40, size 71 square meters, starting price approximately 189,000, price per square meter around $2,670 per square meter. Now this format becomes significantly more interesting. And honestly, one of the strongest aspects here is simply the price per square meter relatively to the segment, especially considering the location inside NUANU. The layouts themselves are also quite well designed. The villas include a separate living room, ceiling around 6 meters high, a private pool area, and a relatively ergonomic bedroom with workspace integration. But personally, my favorite detail is actually something very simple: the bathtub. And surprisingly, bathtubs are still relatively rare in Bali villas. At the same time, they genuinely improve rental attractiveness, especially for couples and short-term tourists. It sounds like a small detail, but in hospitality real estate, details often directly influence occupancy rates and guest satisfaction. Overall, the 1-bedroom villas feel like a fairly balanced product. Strong design, reasonable pricing, and relatively broad rental demand. 2-bedroom villas. Total units 15, size 104 square meters. Starting price 249,000, price per square meter and around 2,400. And personally, I think this is the strongest investment format in the entire project, probably by a fairly significant margin. The layout is symmetrical and functional. 2 bedrooms, spacious living area, private pool, and enough privacy for families or groups. These villas can comfortably accommodate families with children, groups or friends, or longer-term residents. And considering the proximity of schools and family-oriented infrastructure inside NUANU, I'm fairly confident that this format will maintain stable demand, both for short-term rentals and long-term stays. Another important factor is scarcity. There are only 15 units in this category, and limited supply combined with relatively strong pricing creates a potentially attractive setup for future resale liquidity. So if we are talking specifically about investment balance between entire price, rental demand, and resale potential, then for me, the 2-bedroom villa is clearly the strongest product in Black Sands Oasis. 3-bedroom villas. Total units 18, size 136 square meters. Starting price approximately 315,000, price per square meter around 2,300. The 3-bedroom villas offer noticeably more spacious layout, larger pool, bigger private courtyard, more residential feeling overall. This format works especially well for larger families, long-term stays, or groups traveling together. And interestingly, the price per square meter here is actually lower than in 2-bedroom villas, which from a value perspective is definitely attractive. At the same time, investors should understand that this is also a more expensive product category. And generally speaking, higher priced villas tend to have slightly lower resale liquidity compared to mid-market format. So while the 3-bedroom villas could still perform very well operationally, I personally still believe the 2-bedroom format remains the strongest overall balance between affordability, demand, and liquidity. So if we summarize the unit formats overall, I believe the project's biggest competitive advantage is still its concept and ecosystem positioning. That's what creates uniqueness, and the long-term uniqueness is exactly what helps projects survive increasing competition in Bali real estate. From an investment perspective, the 2-bedroom villas look like the strongest overall product. The 3-bedroom villas work well for lifestyle-oriented buyers, and the apartment remain high risks in terms of resale during construction, but potentially interesting specifically for long-term rental strategy. It's going to be one of the best performing formats in this project. We will talk about this later. When it comes to infrastructure, every project inside NUANU shares one major advantage, being located within the largest lifestyle and infrastructure development in Bali. And that's a very serious competitive edge. NUANU already has or is actively developing several high-quality European and local restaurants, one of the largest food courts in Southeast Asia with dozens of venues opening later this year, the Luna and Utopia beach clubs that have already become popular across the islands, the Lumeira Spa Complex, where guests from all over Bali come for unique jungle view wellness and sauna experiences. Concert venues with regular events already attracting thousands of visitors. Educational spaces including Cambridge certified school and kindergarten. Galleries and museums hosting local and international exhibitions, and even mini zoos and family recreation areas. More than $300 million has already been invested into these public spaces, and investments continues to grow. That's actually what creates such a strong competitive advantage for projects located inside NUANU. What's especially important for Black Sands Oasis is that all of this infrastructure is within walking distance. So this isn't just a place where tourists have things to do. It's already becoming a fully developed ecosystem where guests don't really need to leave the area. As for the project's own infrastructure, it also looks well thought out and allows guests to comfortably spend time inside the complex itself. The project will include an Asian cuisine restaurant, a signature coffee cafe, a shared swimming pool area, a Moroccan hammam and co-working space. Overall, it's already a very solid infrastructure package, even without considering the scale of NUANU itself. So it's fair to say that infrastructure will be one of the key drivers directly affecting the project's attractiveness among tourists and positively influencing occupancy rates. As I always say, the leasehold term is one of the key factors behind a successful investment strategy in Bali real estate. It directly affects not only the property liquidity, but the entire investment model. Because when it comes time to resell the property, the next buyer also needs to have a strong remaining lease term, ideally at least 25 years and preferably closer to 30. That way, the buyer understands that even though they are purchasing the property at a higher price than the original investor, they are still getting a solid remaining lease period and a predictable return profile. And today, for a completed property in Bali, a healthy rental yield is generally considered to be around 8 to 10% annually. Speaking specifically about Black Sands Oasis, the project offers a 37-year leasehold plus a 20 years pre-warranty extension option. So by the time construction is completed, investors will still have around 35 years remaining on the lease, with the possibility of extending it even further. And this is a very important point. If you compare project inside NUANU, you will notice that a certified leasehold is roughly 30% stronger than what most competitors currently offer. The average leasehold term inside NUANU today is around 25 years, while Black Sands Oasis provides a full 35 years remaining. Yes, many developers talk about negotiating lease extensions or purchasing additional lease years in the future, but as of today, very few have officially shown signed agreements with the landowner. So for now, we should focus on confirmed facts. Black Sands Oasis currently has the longest verified leasehold amount project inside NUANU. When it comes to investor protections inside the contract itself, this is honestly one of the strongest agreements I have seen in Bali market. Partly because I was personally involved in improving the contract structure and already closed several deals with the project, securing very strong terms for my investors. But even without my involvement, a unit standards agreement is already quite strong and balanced. It's not heavily titled in favor of the developer, which is something we often see in Bali real estate. So what's included in the contract? First of all, both the PBG and SLF permits are clearly specified, along with the exact deadlines for obtaining them. In fact, the developer received the PBG permits just a few weeks ago and can now officially begin construction works on site. So, congratulations to unit team. The agreement also includes a full refund clause plus a 5% annually penalty in case of delays in obtaining this SLF permit. As for zoning, the project is located in a pink tourism zone. I also conducted an independent due diligence review through my agency Blackpoint. So we received a detailed report of around 35 pages covering zoning verification, permits, taxes, project structure, and the full legal framework of the development. So if you enter the project through our agency, we will of course provide you with this due diligence package for review. And as always, if you are looking for a Bali property with a genuinely strong investment model, transparent legal structure, and a verified developer, feel free to contact me on Telegram. I will help you choose a project based on your budget, goals, and investment criteria. As for the payment plan, it's also structured in a relatively safe way for investors. The initial payment can be reduced to around 20-25%, which is quite comfortable from an investment perspective. All construction stages are clearly fixed in the contract and tied directly to actual construction progress. At the same time, the final 10% payment is only made upon key handover. This is a very important mechanism because for a Bali developer, 10% is a significant amount of money, which means they have additional motivation to complete the project on time and deliver the property properly. When it comes to technical guarantees, Unit is honestly one of the strongest developers on the market in this regard. The project provides a 25-year structural warranty covering the frame, load-bearing elements, and major construction systems. There are also a separate waterproofing warranty and a separate engineering system warranty for up to 5 years. And this is generally important because many developers in Bali either don't include these guarantees at all or describes them in extremely vague way. In addition, when it comes to financial guarantees, Unit is one of the few developers in Bali willing to show proof of project financing. At the moment, the project already has financing secured for approximately 30 to 40% on the construction progress, plus around 50% of the units have already been sold. So combined, the project is essentially fully secured financially. That gives confidence that the project will at the very least be completed. In addition, the project is partly financed by Sergei Solonin, who holds a stake in Unit. This is another trust factor and additional reassurance that the project will be delivered within the announced timeline and quality standards. So overall, to summarize, I would say that Sands Oasis is probably one of the strongest projects currently available on the Bali market. And considering the company's background, I personally believe it's a developer that investor can realistically trust to fulfill its obligations. Evaluating rental profitability inside NUANU is not an easy task. I personally belong to the group of analysts who believe NUANU has enormous growth potential in tourist demand over the next 2 to 3 years. That's why currently rental performance in the area is still not fully represented. Most existing properties are located outside the NUANU territory itself, while the infrastructure inside the project is still actively developing. In reality, the main infrastructure boom is expected over the next several years. So when building a financial model, it's important to understand that today's rental figures don't fully reflect the project's future potential. That's why I decided to calculate profitability using both current market statistics and more optimistic scenario based on rental growth by 2028, when Sands Oasis is expected to be fully completed. Investment strategies. I usually divide investment into two main strategies. Short-term strategy, resale before project completion, and long-term strategy, generating rental income after completion of the project. If we talk about apartments, their compact size limits the possible use cases. This is primarily an investment product designed for short-term rentals, which means the secondary market buyer pool will mostly consist of investors. On the other hand, the project has one of very strong advantage, its location inside NUANU. According to the project's management, Sands Oasis is expected to become the last residential complex developed inside NUANU itself, meaning new apartment developments inside the area are unlikely to appear in the future. That makes these units a relatively limited product. At the same time, apartments traditionally remains most difficult format to resale in Bali. Villa resale potential. When it comes to villas, the situation looks much stronger. All villa formats inside the project have solid resale potential. First of all, because of the layouts. There are full-scale villas with separate living rooms, private yards, and swimming pool, not just compact studios on land. Second, because of the pricing. The price per square meter in this project is roughly 30% lower than in most of the developments currently being built inside NUANU. This becomes very clear when comparing competing projects. And it's exactly this combination, lower entry pricing plus a longer leasehold term, that creates strong resale potential for the villas in this project. Long-term strategy, rental income. Now let's move to the second strategy, long-term rental income after the complex complex becomes operational. As I mentioned earlier, forecasting profitability inside NUANU difficult because the area is still actively developing. So in my analysis, I rely both on developers' numbers and on independent rental statistics for the area. One-bedroom apartments. ADR, average daily rate, $85 per night. Independent market statistics, ADR $113 per night. Developer occupancy forecast, 90%. Independent market occupancy, 67%. In my opinion, the developers ADR is slightly conservative, but this is balanced by the higher projected occupancy. And honestly, that strategy makes sense. Slightly lower nightly pricing can help maintain stronger occupancy level. After standard operating expenses of roughly 50% of gross revenue, we get ROI around 13.2% based on current market conditions and ROI around 13.7% if occupancy grows to around 70% as NUANU continues to develop. One-bedroom villas. Developer ADR $140. Average villa ADR in the area $160. Developer occupancy 90%. Average market occupancy 70%. Just like with apartments, the developer is betting on slightly lower nightly pricing while compensating with higher occupancy. At a villa price of $189,000, this results in ROI around 10.3% based on current market conditions. But if we carefully assume occupancy reaches around 75% over the next few years, which looks realistic for a fully developed NUANU, annual returns could increase to approximately 11.5%. Two-bedroom villas. Developer ADR $290, area average ADR $193 per night. Developer occupancy 76%, average occupancy in the area 71%. Overall, the assumption used by unit in their financial model look fairly realistic for a project expected to become fully operational around 2028. Based on current market performance, net annual return estimated at around 10%. But if we factor in NUANU future growth and increase in tourist demand, potential returns could reach approximately 12.1% annually. For three-bedroom villas, the developer projects an ADR of around $297 per night, while the current area average is closer to $221 per night. At the same time, projected occupancy is 83%, while the current area average is around 87%. And here the situation is actually the opposite compared to the smaller format. The developer assumes a higher nightly rate but slightly more conservative occupancy. And honestly, this model makes sense because three-bedroom villas are more premium products that usually operate at slightly lower occupancy levels but generate significantly higher nightly revenue. Using current area statistics, projected returns are around 11.1% annually. But even if average nightly rates increase modestly to around $250 per night, which looks realistic for NUANU over the next several years, projected returns increase to approximately 12.6% annually. Overall, if we summarize the rental model, the project's financial assumptions look relatively realistic, especially considering that NUANU is still in active growth stage. Even based on current market numbers, most property formats inside the project show potential returns in the 10 to 13% annual range. And if NUANU's infrastructure actually reaches the level currently planned by the developers, those numbers could become even stronger. So, friends, we have now completed a detailed breakdown of the Black Sands Oasis project by unit development. And now I'm ready to move on the final evaluation. As always, I want to remind you that this is entirely my personal opinion. I'm not claiming absolutely truth. If you have your own opinion about the project, feel free to share in the comments or contact me directly. So let's begin with the location. For location, I would give the project 85 points. Without question, this is a very strong position inside NUANU itself, surrounded by one of the largest and most expansive infrastructure ecosystems in Bali. When it comes to developer experience, I would give it 75 points. Yes, the company faced certain challenges in its first project, including issues related to contractors, but at the same time, the team handled the situation professionally and clearly learned from those mistakes in their second project. Still, the company has not yet delivered a product of this scale and premium level before, so I will remain slightly conservative with the score. As for the management company, I would give it 55 points. In my opinion, management side is relatively young and will need more experience, especially when operating a highly conceptual product like Sands Oasis. When it comes to infrastructure, there is honestly very little to criticize here. That's 95 points. The project benefits both from its own internal infrastructure and from the massive surrounding ecosystem of NUANU itself. And objectively speaking, NUANU is already one of the strongest infrastructure concepts currently being developed in Bali. As for the concept and design of the project, the concept is definitely very interesting. And in Eastern Castle aesthetic, Moroccan palace inspiration, premium level service, all of this creates a very unique product. At the same time, the design itself may feel somewhat controversial to part of the audience because some buyers still prefer more traditional Balinese architecture. But personally, I believe this kind of non-standard concept will become a serious competitive advantage in the long run compared to generic Bali villas. So here I would give the project 70 points. When it comes to leasehold structure and contractual guarantees, I would give it 80 points. Yes, I personally participated in improving parts of the agreements, but even the standard unit contract is already quite good. It includes solid investor protections, construction guarantees, a clearly structured obligation system, and fairly balanced relationship between the developer and the buyer. And finally, regarding investment potential, I would give it 65 points. I genuinely believe it's NUANU future and honestly think that even the numbers we discussed today may still be relatively conservative. Even a 10 to 13% annual return in Bali is already considered a strong result. But at the same time, I don't want to inflate the score purely based on my personal expectation about NUANU's future growth. So 65 points feels like a fair, strong and realistic assessment of the project investment potential and its current stage of development. That brings the final project score to 75 points overall, and in my opinion, that's a very strong result. Sands Oasis could realistically become one of the best investment opportunities on the Bali market by 2026, so this project definitely deserves attention. And if you would like to explore this project in more detail, feel free to contact me on Telegram or WhatsApp. I will help you secure strong terms, a solid contract, and potential better pricing or installment conditions. And that's it for me. As always, don't forget to subscribe to the channel if you want to invest in real estate without illusions and with a clear, rational mindset. Thank you. Bye.